Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be diving into the world of Bitcoin to kind of take a look at what's been going on most recently. We've seen a bit of a push to the upside with the price of BTC. And the biggest question here is it a fake out? Is it going to actually start to come back down? Is it going to set new lower lows and all of those kind of questions? Or is this going to continue to the upside? And are we actually going to go be, potentially looking at new all-time highs, etc. and things like that? So this video is going to dive down into the charts. We'll have a look quite heavily at the weekly chart on Bitcoin, go into the daily, the hourly. Obviously, we'll have a look at some Glassnode data as well and see what's going on there. So as we get into this, if you find it useful and informative, then do go ahead and hit that like button. Really do appreciate that. If you happen to be new to the channel, then do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's jump on down to the desktop and take a look at what is going on here with Bitcoin. Okay, guys, so here we are on our weekly chart, right? And this is actually Bitstamps data, so we can zoom all the way out and see all that data. But we're really going to focus in on what's going on just here. As you can see, we can see that ABC motion up there. And obviously, we have the Gaussian channel that we closed inside of last week. And now, obviously, we see the reversal of this, right? So one of the main things that we really need to talk about or we need to kind of focus in on is what is going on with these key fib levels. But before we get into that, we are going to obviously talk about not so much the Gaussian channel. We're going to put a pin in that for a little bit and see what happens next, because the next kind of few weeks are going to be key as to whether or not we can actually say that the whole theory about the Gaussian channel and closing inside it leading into a bear market is either true or false. Okay, and we're going to figure that out in the next few weeks once we kind of take out these next levels. Now, the main thing that we need to talk about here is obviously the fact that we are heavily oversold, which is fantastic. This current week would have been the peak of Bitcoin based on the timeframes, which we know we're actually extending over and over again. I've often said January is a nice kind of time to potentially be looking at Bitcoin's peak from a data point of view. We first saw the 2013 peak in November. We saw the 2017 bull run in December. Maybe the 2021 will be January, i.e. we extend it ever so slightly. But we'll see. There's obviously other ways to kind of analyze time. Trying to mess with the time kind of aspect of it, it's incredibly difficult and very few people actually get it right. Okay, I think it's just not impossible with such an insufficient amount of data. But anyway, we'll get into that at a separate point, I'm sure. Main thing that we want to acknowledge is there's an ABC down just inside here. Okay, so we can see that we had this this huge pullback, and you can either look at this as an A, a B, and a C wave coming in down lower. I actually can grab that C. I don't know why it keeps doing that for me. My mouse is playing up today. We obviously have the ABC down, or we can actually take a look at this from an impulsive perspective. And obviously we can see here we have 1, 2, 3, 4, 5. Either way, you kind of get to the same point in time. You reach that low level, okay? An impulsive move kind of fits a little bit neater as an ABC here. This C wave definitely went impulsive, pushed up for the fourth wave, and then we saw the fifth wave come down. Okay, so now you understand that, basically in the latter part of June, we saw the impulsive move down, get the correction, we're heavily oversold, and then we started to see a good push to the upside. A big A wave, down with a B, and then we're looking for a C. Now, when we actually take a look at this A wave, we have our A move up, our B move down, and our C wave up. Again, that's inside of our larger A wave. Okay, then we can see down here we also had the same kind of thing. We had our A wave down, our B wave up, and our C wave down. Now, this particular week actually had both the high of the B and the low of C kind of flashed in there, really brought that one down. But you can see that the week before was lower than the high that we had in that particular week, and therefore we know that's an ABC to the downside. More visible on the daily chart than it is on the weekly chart, but it is there. And then we start to see this reversal, and we're starting to see a bit of a push back to the upside, right? We can see here, right in this particular moment in time, the last 3 weeks have been very interesting. Not only have we closed inside that Gaussian channel, but you can also see some motion to the upside overall, right? And what we're actually waiting for here is to see how high we're going to push up with our A wave. And you can argue that there's an A wave here, and then a B wave pullback and C. But that's too small of a scale for this weekly chart. What we're actually looking for is a much bigger kind of A wave, a pullback for B, and then into C. Now, for me personally, I think that's going to land right in about here, and then we're going to see a pullback that potentially could be a bit of a bear trap that then leads us into completing this C wave move, taking us higher. Okay, and there's a few interesting levels here that we can obviously acknowledge and kind of look forward to, right? So there's a few things that we can obviously do to help us understand what's going to play out, what's not going to play out. So I'm going to make this a little bit neater, and I'm going to tidy this up by removing some of the smaller time, ABC moves, and just keep on focus on that that bigger piece, right? This bigger ABC move to the upside. Okay, so here's your B, and now we're looking for the C. Now, the main thing that we really need to focus in on here is obviously this pullback that we've had with wave B is a significant test of the Gaussian channel. We closed inside it, obviously, and the main thing here that we need to acknowledge is that we are going to bounce, right? Everything bounces. We don't move up in straight lines. You can see this here. We moved up, we pulled back, we moved up again. Likewise, we pulled down, we pushed up, we pulled back down, right? Everything moves up in waves or down in waves, right? And that's why we have these ABC corrective moves or the impulsive directional moves, depending on whether you're going up or down. It doesn't really matter. ABC down, ABC up, 1 through 5 up, 1 through 5 down. They work exactly the same way. Corrective just means that it's short term, whereas impulsive means slightly longer term. Okay, so that's kind of how we look at it. Now, what we have here is a bouncing scenario. We come down for B and we're going to be bouncing up. Now, we know it's an ABC move, which basically means that C wave should at least come up to the A wave high to kind of be valid. At least, most of the time, that's kind of how it works. Sometimes you actually find them stopping short, and that's also a possibility. But we also, for the most part, what we want to look for is a bouncing zone, an area that we should probably be looking for as an area of concern, and specifically on a larger time frame like this, somewhere where we're going to find volatility, and we're most likely going to find a B wave pullback inside of the next move, right? So right in here is we have the fibs, right? And basically running from the high areas of A and the low area of wave B on this weekly chart, okay, because it's important that we do it on the weekly. There are 3 key areas for us. Now let me just come over to this chart here where I have them all drawn out. Now this one is obviously Binance, but the same concept applies. Okay, exactly the same effect. There are 3 key areas that we want to be monitoring first, okay, on this next impulsive move to the upside. Okay, so this basically comprises of the 618. This comes in at $58,686.11. Okay, that is going to be the first area that we want to be monitoring, because if you get rejected from there, there's a high probability that we're going to pull back down. Okay, again, this could lead to lower lows. Not saying it will, it's just that it's possible that it can. Okay, going up to the 702, this is $60,954.09. Again, rejection from here will see us pull back down, potentially into those lower lows. No guarantee of that. Again, just be kind of open-minded as to what's going on there. And the last and the most important area is that 786. This comes in at $63,222.06. Okay, so here again, rejection from this point means you usually pull back down, and it doesn't mean you're going to go to new lower lows, but there's a possibility of that, so you have to acknowledge it. Now, getting a weekly closed candle above 786 means that you're more than likely going to be pushing up to the 1.618 area. Pretty decent kind of rally at that point, I would have thought, with a pretty good confidence in the market getting that closed candle in position there. That potentially could lead us out to $85,685, which would be another all-time high. Now, knowing that this is potentially on the horizon here, what is the most logical path, knowing what is actually going on here with a C wave? And this C wave is most likely going to be comprised of an ABC. This basically means that I see rejection at that 786, that $63,000 range, a pullback where I think we'll be upset in a bear trap, maybe coming down a reasonable amount, and we'll check that in a moment, and then going up into that C wave high. Now, what we do is we'll actually measure this distance, right? We'll go ahead and grab hold of this A wave high, which I think is going to be the most logical area for pullback. And we can actually pull this correction down actually to this lower area of just about $50,000. Hold that 50,000 support level, and then we'll see this one rise back up again. And if we go ahead and put that on here, we can see that actually that would overextend our C wave, which is perfectly fine. But we'll just measure that out correctly so that we actually have a better idea as to where that is likely to go. And we'll just grab that and we'll put that up into our B wave high here. Right, so that basically means that this C wave has the theoretical kind of stopping point of $71,000. At this point, you might see a small ABC correction, or we might continue this and actually turn it impulsive and continue that run to the upside overall. And again, might overwick our standard C wave there. So again, monitoring that situation, I'm going to leave this as a slightly conservative target for now. We'll just pop that onto that $71,000 range, and then I'll delete that one off, right? So here we can see a bit of a path. Okay, this path to an A wave high, still seeing rejection from this point, where people might be thinking we're going to go down to lower lows, set the trap, and then get the reversal, because in fact it's an ABC wave inside of our C wave here. Now this C wave for our A wave here could actually fall short and could actually land there. However, if we actually take our fib and run it from the bottom of our A wave down here, okay, and then we go ahead and actually take this high point, we'll put it on top of our A wave here, and then we'll run this down on our B wave low, which we know is down here, and then actually that targets out a C wave at $82,000. Okay, so that's the larger play. So I'll grab hold of that. That's where we'd expect a standard C wave to land. Now, one of the things that's really important about this is this C wave also comes up to the 702 area, where you could potentially see rejection between the 702 and the 786, which means this C wave actually might fall short of that $82,000 target there. Okay, again, in line with ABC moves, again that 1.618 move is also still on the horizon around that $83,000 range that I spoke about earlier as well. So there's lots of things in here that we have to consider. Basically, what I'm looking at here from a C wave area is about 71k all-time high area, and potentially pushing up into that kind of range of about $82,000 to $83,000 within that larger play for a C wave high. This is at the point then either you're going to go impulsive up, which is a very possibility for Bitcoin at that point in time, as this is into the new year quite significantly, before we potentially actually see any reversal. Alternatively, you see an ABC, and maybe this is the top for Bitcoin, and we start to come back down, and we never reach that 100k area. Again, going impulsive means that we're pushing above that $97,000 range, and again would take us above the 100k if we do turn impulsive on this move to the upside next. So lots of interesting things going on here with Bitcoin on our weekly chart, right? So very important that we're aware of that. The stochastic RSI is definitely supporting this A wave now, so we are looking for the pullback that will happen once we kind of get into this key area up there. But yeah, for now we want to be monitoring that situation, right? If we actually pull this back down and we really focus in on those key fib levels where we are right this second, basically we are looking at that range of $63,000 for our A wave, and again our stochastic is supporting that move with the pullback, taking us down into these lower ranges, potentially shaking people out low in the stochastic RSI, and then of course moving on nicely back to the upside, completing the ABC move. Now, that's the weekly chart, right? It's looking pretty good, but we do have to be very aware that actually, we might actually find this C wave coming down up to this area. We have the double top, and actually we go right back down again. Again, lots of things going on with Bitcoin that it's important that we don't, just jump in, don't FOMO at this point. We really need to see what happens here. We want the confirmation that we are moving up in a B wave C into the C wave, set the new all-time high, and then I think from that point you're going to be pretty decent. But we are looking to track quite nicely to the upside. I think there's a fair amount of cash to be made here, not really from a percentage point of view. If you've got a good stack of Bitcoin already, I'm sure you're probably going to be doing okay. But you're talking, probably 20% move to get us up to that point before we start to get the reversal. And then of course from there we are probably going to lose a reasonable amount of that value, another 20% down at that point to get us into the B wave low. And then from there I would imagine that we're going to get pretty decent traction as we look to complete out that C wave, about a 64% move. Okay, so lots of ways to be shaken out on that journey. No way of guaranteeing that any of this is going to play out, but it's the most probable kind of outcome that I can see inside the data of the weekly chart right now. So I really wanted to kind of get that covered off, so everyone is aware of what's going on there before potentially seeing these kind of pullbacks down. No, I don't think there's necessarily lower lows that are coming in here, but I do think it's important that we could acknowledge that these are key areas that potentially can lead to new lower lows. But I think they're not very likely, in my opinion. I don't think that's something that we are likely to see. Of course, on this weekly chart, it could actually well be that what you're actually seeing here is this could be our B wave, and we could be coming down into a C wave low. But again, we'll know more once that time actually comes. So that's why I'm saying be very cautious right now. Although Bitcoin is pushing, prices up, be aware that these are key areas that are going to resonate incredibly well with traders. Potentially, we're going to start to see reversals, right? And as we come down into our Glassnode data, we can of course see the balance of Bitcoin on exchanges is still very low. We've come up a little bit, but we are still, pretty much, Bitcoin leaving the exchanges, not actually going on exchanges. Nothing like we had seen back in, May, for example. And actually, when we zoom out of this and we take a look at like 2019, we can see that we've been diminishing, except for obviously May here where we had that surge. Other than that, we're pretty low. We haven't been this low for quite some time in terms of Bitcoin on exchanges. The other thing that's really important to kind of note as well is the net position change. I spoke about this quite a bit as well recently, but what you can tend to see is as the price moves up, usually you see Bitcoin leave the exchanges, right? So for example, you can see here the price of Bitcoin moving up, and you see basically this red section here. The net change is that Bitcoin has left the exchanges. As the price pulls down, you see Bitcoin coming back on the exchanges, right? And what you actually see here is the price push up as we go into this red area. Then we kind of saw a bit of green here, and the price has come down, but we've actually seen Bitcoin leave the exchanges at the same time as the price comes down. This is incredibly odd behavior because normally you see the price come down, you see these green spikes, you don't see the red spikes. So really interesting stuff. Okay, so do watch out for that. I think there's some stuff kind of going on here. Again, you can see, you know, stuff kind of leading up into these kind of dumps, and then yeah, as price comes up, you see the red again. So interesting that we see red here whilst the price is pulling back down. You don't normally see that. You normally see green when price comes down and red when price goes up in terms of the net position change. So interesting stuff is happening here. If I actually zoom in on 2021 specifically, you get a little bit more of that detail right here. The price of Bitcoin comes down and we see red. And whereas actually we're supposed to see a green, okay? Obviously, like we see up top here, price kind of plateauing, and then obviously, you know, price coming back down, we see the red, which is odd. Normally, price goes down, you see Bitcoin come onto the exchanges. Price goes up, Bitcoin leaves the exchanges. So very strange things are going on with Bitcoin. Be very aware of that as well from a Glassnode data perspective as well. So ultimately, guys, the main point of this video was to kind of be aware that although we are seeing green, and it's fantastic that the portfolios and starting to see some form of recovery, but also, you know, that there's some opportunities to maybe make some money in some of these trades and these low area levels. Do be very cautious over what happens next. The 618, the 702, the 786, these are key areas. We are waiting for some form of reversal. I think it's going to be a B wave low, going into a C wave high, potentially going after some of those much higher numbers, such as that 82 to 83, maybe even $85,000 range, and really taking out some of those, you know, all-time high I guess, options that we do have out here in some of these key levels of the Fibonacci retracement zones. But yeah, that's the main thing really, guys. Just monitor this situation. Hope everyone has a fantastic Christmas. I am going to leave the video there. If you have found it useful and informative, hit the like button. Really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.